Hi friends and traders, welcome to Trending Sutra. My name is Amit and today we are going to discuss about gold fundamental and technical outlook along with the silver. Where gold is heading, what is going on in the gold market, fundamentally and technical. We will be reviewing in next few minutes. This could be a little extra lengthy, but stay with us. You will get to know more about it. Most of the references and few of the references are coming from the latest report published by World Gold Council on 6th of October. The link is shared in the video. You can check the entire report over there and have a view on that report. So let's start with how gold has performed year till date in this year. And so started, let's see. So if we look at gold. So spot gold actually has performed minus 7% in negative, whereas silver has performed minus 16%. And if we compare with dollar index, it has dollar index has gained by more than 17.5% year till date. Gold as a commodity has so far been resilient in compared to other assets, whereas gold has not fallen more than like 10% or something like that. The reason behind that, despite having a very strong dollar index, gold is still holding in the market. Is one of the primary reason is that gold is also taken as a safe haven asset and a hedge against the inflation. So where when we are having a very high interest rate cycle, our bond yields, our 10-year yields are inching towards 4%, 2-year yields are inching towards 4.3%. Gold is still moderately, we can say that gold has performed moderately better than other asset class, especially in terms of compared to the dollar index. Uh, Fed balance sheet, if we look at the Fed balance sheet, it is still above $8 trillion. So which explain that from 2020 in last 2 years, from $4 trillion of Fed asset, it has just to $8 trillion, and spot and gold is still near about 1700 and has not fallen below $1600 or as per what market is expecting. Major headwind for the gold still remain the rising dollar and the bond yield. But considering how dollar index is rising, interest rate differential in the market and between the economies, gold's performance in terms of dollar index is still minus 7.4% or minus 7.5%, but it has performed almost in all the other major currencies. So if we compare like euro, it has performed by 7.4% positively. In yen, it has given a return of 16.4%. In pound, it has given return of 12.3%. If we talk about rupee, it has given a return of approximately 3.4% because dollar rupee has gained by more than 11% in this year itself. Highest return of gold globally comes in the renminbi, in the CNY. So since Chinese yuan has depreciated extraordinary in this year, so gold performance into Chinese renminbi is around 30%, 29.2% approximately. So gold is only underperforming into dollar currency because the rise in dollar index and the rise in dollar value, whereas it has performed better in other currency. Since dollar being the major key driver for the gold prices and the risk is coming from the dollar strength and bond yields are pressuring in the gold market. But if we look at other factors like demand outlook, so demand outlook in India is still very strong, which is still a very biggest market of gold. China demand is slowing down because of the recent COVID lockdowns in the economy. And from last 1.5 years, we have seen that the slowdown in the economy actually has dampened the mood of the investors overall. Along with that, we are seeing a net inflow from the central bank buying, despite the buyings are very marginally, but still they are net buyer in the market, the central banks. If we are talking about gold ETF, in the September itself, we have seen a negative outflow of 1.4%. which is not so positive but not so negative for the gold bullion market. Considering other factors like how gold is positioned going forward, and if we see some technical parameters like how gold has performed so far. Let me show you something. So this is a chart which explain that what are the key contributor of gold return in price action for the negative and the positive. If we see major driver which is actually supporting the gold prices is economic expansion, whereas the biggest dragger coming from the opportunity cost, the rates due to the FX intervention. Similarly, in the September, these were the major dragger. Risk and uncertainty is still contributing positively for the gold, and the opportunity cost, because rising interest rate decrease the opportunity cost in the gold, so it became the major driver for the downside in the gold prices. Price action reaction for the Fed hawkishness is now slowly declining in the gold, which is explaining in this chapter on every Fed event how gold is reacted. In terms of performance, gold is reacting positively. If we are talking about compared to 1 hour price differentiation before the decision and after the decision. So this reaction is actually narrowing down. On the fifth consecutive month, central banks are net buying in the market. So these are some facts what we are understanding from the global database. Comparatively, gold has outperformed most asset class in September. That's how we see. Dollar obviously is a positive indicator, has performed better than any asset class, whereas gold is the least worst asset performer in the month of September. September, we see gold has actually touched nearly $1,600. So despite of that, gold is still performing better than other major asset class. In the September, US milk sales has reached 22-year high. That is very good sign of demand revival in the market, which is showing that the resilience in the market is actually, backed by a few things. Like since the Fed balance sheet is still above $8 trillion, the inflation is still very high, and gold is always considered as a hedge against inflation. That's why gold has performed better than silver. Silver was down more than 16% year till date, and gold was still around 7.5%. So these are few factors what we are considering, which is supporting gold despite the pressure from the dollar and higher bond yield prices. Technically, if we see where gold prices are heading, so this is the this is after sixth consecutive month, gold actually find a strong support in October. So 16 says last month we see prices corrected towards $16-14, but it rebounded very sharply in October month, and we have seen almost $80 move so far. And we have just closed first week of the October, and it is form a kind of a double top pattern around $1733, 1730 $30 ke aspas. Around $1730, gold has created a double top so far in the monthly. Considering what is lying ahead, if we are able to break this 1732 1733 range on the upside, we are expecting that gold will likely push higher over 1816 or at least 1773 in this month, because the positive and divergence in the positive opening in the gold in this month is showing there is a strong revival in the market. Along with that, last week CFTC, as per the CFTC report, net position added in the market was around 35,000 contracts. So at least 35,000 contract added on the long side. So these are quite positive news for the gold. Whereas if we see the closing on the Friday, we could expect that some dip towards 1678 or 1672 might come in the market, and gold then may resume upward journey. The view will negate only if we are breaking $1660. That's the last month this month opening and last month closing. So if we are breaking $16 somewhere around that, then we are probably heading for the lower lows, and most probably towards 1580 or uh, 1570, near about 1550 or 53. So that's a technically level what we are expecting in the gold. Coming back to the, if you talk about dollar index, which is the major driver so far for the gold prices. So if we talk something about dollar index, so DXY sits at a 20-year high, and on a relative real effective exchange rate basis, dollar is actually currently the most expensive major currency by some margin. Future positioning also indicates a crowded long dollar versus euro, JPY, and GBP. After 27 years, Bank of Japan intervened in the market, whereas the intervention was not that effective so far. Bank of England actually also intervened in the market. European Union ECB is also, tightening their interest rate cycle. So these are a couple of factors which are stating that dollar may be near about its high or peak of the long cycle after 2020 rise. So if there is a slightly reversal in the dollar index, if we see, then probably there are more chances that gold will react positively towards it and moving upwards from this quarter. So this is the last quarter of calendar year 2020, and we could expect that the positive return could be coming back into the gold market, and buying is coming back into the gold market. The news from the China market is also suggesting that average trading volume is, picking up, which is a very quite positive signal. And as we already discussed, demand outlook is quite positive in the gold in India. So these two markets, if suggesting that the buyers are back in the market and there is a slightly reversal comes into the dollar index, then we are heading towards a higher highs in the gold, and the gold may find support over these levels. So if we talk about some global outlook, so let's talk about global outlook. If we see the global outlook on the dollar index, on the dollar, so US dollar is, as we mentioned, is quite well placed around 1674, and expecting around 1750, above 1750 or 1749. 1786 could be the next hurdle, and after that 1826 we are expecting in the next few weeks, or probably by October and or mid of the November, if dollar index start going down. The next major move coming in the market will be coming from the uh, next Thursday, the Thursday inflation data, which will be coming on the Thursday. So inflation data will actually explain that where the inflation is heading, and the next major move will likely come after that inflation data. Let's talk something. Let's switch to the silver. So silver actually has performed comparatively worse than gold in terms of performance. And if we talk about technically, so only lastly, silver has rebounded sharply in terms of prices. It got support around $18. It moves towards 21.20 and it fall back again towards 20.129. So silver is getting some support from a very industrial demand from the silver is actually getting higher and higher. And technically also, this is probably the second consecutive month where silver is performing better compared to gold. So any reversal above 20.74 could lead for a rally towards 24 or 23. That could be the very sharp rally what we are expecting. And as we are saying that if the dollar index comes down, silver will be heading towards like gold and silver are heading towards further upside of around 6 to 7%, and approximately 10% takka really we could see 10% or 12% really in the silver prices. So that will be somewhere around 23 or $22 in the short to long term. So ideally the resistance will be around 23.58. That's what we are expecting in the market, and immediate resistance should be around 21.88. So these are the technical where silver is well placed. And overall, we are expecting that silver may perform as we have seen the economic activities are slowing down. But despite of that, silver has not broken crucial range and has not fallen more than like below $17, sustained below $16. So these are a couple of factors which are supporting silver. If we talk about ETF inflows are very positive in the silver compared to gold, and the silver demand is also rising. So silver, in our view, will outperform gold by a margin of approximately 15 to 20% in the next couple of months, and it could expect a strong rally towards 24 or $25 probably by January or December, unless we see a strong upside recovery, like extended recovery into the dollar index. The view could be wrong. Let's discuss what is the domestic outlook price in the gold and silver for the MCX. So if we look at about gold prices in MCX, as we can see, it is closing exactly near our resistance channel, whereas it has bounced quite sharply in October month, sustained above 50,250, and seen a rally of more than 2,000 point after that. In MCX gold, since dollar rupee actually has appreciated by approximately 6 to 7% in last few session, so the majority of the gains in the MCX comes from the dollar rupee prices, not much from the spot gold. So 53,000 will still remain a good resistance level for the MCX gold. And if there is a strong pullback in spot gold also, we could expect that gold may touch 50,700, and that should be the maximum upside level what we are expecting. As long as 51,000 is holding in the MCX gold, we are expecting that the prices will go upward. Talking about silver, silver has sustained in a long range above 60,000, and as long as 58,500 or something like that is holding in the MCX silver, we are of the view that silver is heading towards 66,000 approximately in coming time. So we could expect that expiry somewhere around about 62 or 63,000. And as long as silver is holding 58,000 in MCX, the prices could be heading towards 63 to 64 or 65,000 in the coming months. So our view is quite upside for this month. Reason behind of the because we are expecting that there will be some reversal in the dollar index. The resilience in the gold and silver market will be outplay in the next quarter, and we are expecting that all these factors, coupled with the almost peaking out of the inflation and bond yields, the prices will be responding on into the positive uh, price in terms of positive price action. So these are some of the factors what we have observed and shared it with you. Please subscribe to our channel, like this video, share to your friends and traders. Also check our weekly outlook on Nifty and Bank Nifty shared over here. And thank you for watching us. Thank you.